Thank you once again for joining me here at Commercial Property Club podcast. We are doing another wonderful show. Your show we break down how medical practitioners and also high net worth professionals can build wealth through apartment investing. As usual, I'm your host today, Ola Ibiwoye. And today we will be diving into a powerful strategy, the strategy that allows you to grow your retirement savings while investing in real estate using self-directed retirement account. And what we'll be talking about today is how can you use your self-directed retirement account to invest in apartment syndication. Don't go away. Grab your coffee, grab your notepad, grab your pen, and I'll be right back as we start the show. Welcome back. Once again, my name is Ola Ibiwoye. Thank you for joining me for another chapter title for today. And what are we talking about today here at Commercial Property Club podcast? A wonderful topic, a strategy in which is used in real estate through the portals of your retirement account. And today's topic we'll be discussing today is how does a self-directed IRA invest in apartment syndication? But of course, now we already know what an IRA is. An IRA is your individual retirement account savings. Some of us have this with our employer, and some of us that have businesses running in practice, in your medical practice also too. You have a retirement account that is kept away with the custodian. But the question today would be, how does a self-directed IRA invest in apartment syndication? If you've ever wondered how to tap into the benefits of investing in real estate using your retirement funds, this is that episode that you got to listen to and take notes. We'll be covering what self-directed IRA is, steps to invest in an apartment syndication using one, and some key benefits and also pitfalls to watch out for. So let's get started. First of all, you got to ask yourself, what is a self-directed IRA? A self-directed IRA or SDIRA, that's an acronym usually that is used for self-directed IRA. And that is a type of a retirement account that allows you to invest in alternative assets beyond your typical stocks, bonds, or your mutual funds. With a self-directed IRA, you can actually invest in real estate. Yes. You can also invest in other investments like private equity, even up to the point of considering precious metals. And of course, today we're talking about how do you use your self-directed IRA in an apartment syndication. By now, you already know I'm big on apartment syndication, and we want to see how we could use a self-directed IRA in an apartment investment. The main differences between your traditional IRA and your self-directed IRA is the range of investment options that you have. While a traditional IRA is typically managed by a brokerage firm with a limited menu of investments, a self-directed IRA actually gives you full control. Yeah, that's the advantage. Self-directed, which means you got to self-direct it into an investment. So how do you actually use a self-directed IRA to invest in an apartment syndication? I'm going to give a step-by-step guide as to how to do that today. We're going to start with what is the number one step I'm supposed to take? You're supposed to open a self-directed IRA with a qualified custodians. I mean, what I mean is a custodian is somebody that is going to supervise that retirement account. The likes of your equity trust is an example of a custodian of self-directed IRA. Not all financial institutions offer self-directed IRA accounts. So you got to find the ones that play the role of custodian, just like I said right now. Your equity trust are an example of custodians that can play that role. They specialize in self-directed accounts. And these custodians will handle administrative tasks when it comes to your account and ensure that your investment complies with IRS regulations. You got to keep the IRS happy. We all know that by now when it comes to investment. IRS regulations has to be the boundaries in which you're operating, and your custodian makes you sure that you operate within the confines of IRS regulations. That's your number one step. You got to get that right. Find or research. There are lots of custodians out there. You want to pick on the best, or rather the ones that you think offers the kind of service that will fit your retirement account. What will be the next thing that you're supposed to be doing? You fund your self-directed IRA. That will be the next thing you're supposed to do. You fund it. Sometimes you can have an existing retirement account. You fund your self-directed IRA by rolling over that funds from that pre-existing IRA. Most times it's your individual retirement account that you have with your employer, what you call your 401k, or by making new contributions directly into the coffers of your custodian. Now, keep in mind that rolling over from tax advantage accounts should be done carefully, just like I said, to avoid any penalties or any taxations that might come with that. And what will be your third steps that you need to take? Find the investment, find the apartment syndication opportunity. And we all know that, numbers is the key to this game. Numbers is a numbers game. So what that means is you got to look out there, make sure you do your due diligence to find the right apartment syndication opportunity that fits your financial goal. And once you self-direct your retirement account funds from your setup, then you fund the deal. In other words, after your custodian has set up your paperwork, your account, you have your funds inside the custody, then you fund the deal. That will be the next step, is making sure that you find the right apartment syndication deal that involves researching syndicators. Make sure you find the right syndicators that will do what they said they will do. Evaluate the investment too, also to yourself. You make sure you evaluate the offerings that is being made available in terms of that particular deal, and ensure the deal aligns with your financial goal, just like I said earlier on. Now, what will be the next thing? The next thing will be to direct your custodian to invest into that deal. Since the IRA technically owns the investment, you need to make sure you instruct, I can't stress this enough, instruct your custodian to send funds to the apartment syndication sponsors. The investment will be made in the name of your self-directed IRA. It shouldn't be in your personal name. Make sure you ensure that is done in the name of the account that you have with your custodian. Now, once you fund your deal, the next step, which is the fifth step, will be start earning passive income. Start growing your retirement wealth through that portal of investment, through that apartment syndication, if you have the right team managing the deal, then you should be earning passive income through this particular investment. As the apartment syndication generates rental income, that's how your passive income comes into your coffers also too. Now, depending on the cycle or whatever, how long they might want to keep that deal, 3, 4, 5, or even longer years. The structuring of your deal also matters. It cash flows and you earn passive income. And also to at the backside of things, eventually when the deal is sold, your self-directed IRA will receive the distribution and the profit, all of which grows actually tax deferred, depending on whether you have a traditional or a Roth self-directed IRA account. So you got to understand that your cash flow, then also the equity distribution when the apartment is sold, all goes back into your self-directed account with your custodian. So which means, throughout the process of the cycle of the investment, maybe 3 to 4 years, you are compounding your passive income. You're growing wealth in apartment syndication through your self-directed IRA account. Now, having understand how you self-direct your retirement account, what are the key benefits? What are the key benefits of using the self-directed IRA for apartment syndication? There are several benefits. I can stress enough of that. There are several benefits actually. Number one, tax advantages. Your tax advantage grows. Since earning stays within the self-directed account, you avoid taxation actually, according to government regulation. Once your account is with your custodian, you avoid immediate taxation. It's tax deferred. That kind of account is tax deferred, allowing your investment to compound more efficiently, just like I mentioned earlier on. It allows you to compound your profit. So what would be your next potential portfolio diversification? Real estate investments provide an alternative to some other investment, just like I mentioned earlier on. When you want to compare to your typical stock investment, which are volatile, your real estate investment offers more tangible and stable income streams. Your next benefit, key benefit for me that I think is very valid, is potential for high returns. When it comes to apartment syndication, typically offerings that offer strong cash flows and also equity growth, making them very attractive long-term investment. They're very attractive long-term investment. Now, taking into consideration also to having it in mind that they're tangible assets, just like I said, your stock can go to zero, but your real estate is tangible. Even if value is lost a little bit, it never goes to zero. So you mitigate your risk. Risk and consideration, of course, no investment strategy is without risk, actually. Let's talk about that also too. Here are a few things I could talk about when it comes to risk, as well as mitigating your risk also too. You have to understand that when it comes to individual retirement account that is self-directed, there is something we call prohibited transaction. You have to watch out for that. You can use self-directed IRA investments for your personal benefits, such as staying in the property that your IRA owns. You have to watch out for that. Of course, your custodian would advise you in that line, but also you have to take cognizance of that also too. Then on related business income taxes also too. if leverage is used in the syndication, part of your profit may be subject to that. Then limited liquidity also too has to be something we have to consider also too. Apartment syndications are long-term, they're long-term investments, meaning your funds will be locked up for several years. So you want to commit funds that you know you're not going to need right away, because you can access the liquidity of that funds right away when those funds are in your investments. So those are the considerations that you want to have your self-directed IRA into apartment syndication. Those are the things I believe are very important you need to take into consideration when it comes to you self-directing your retirement account into an apartment syndication. So what are the final thoughts that I think I would love to share with you today? Yeah, using a self-directed IRA to invest in apartment syndication can be a game changer for your retirement strategies because it's over a long time period, offering tax advantages, just like I said, passive income for you, long-term wealth growth. You can stress that. Of course, it's a retirement account, so you want to play long, not short. It's a marathon, not a sprint. But like any investment also too, it's important to do your due diligence. You gotta do your due diligence and work with knowledgeable professionals. You gotta have the right people on your team. Just like I said, Equity Trust is a very good custodian personally. I've experienced them. They have good services. I'm not advertising on their behalf, but there's so many out there that you can actually do your due diligence on personally. And also to make sure you ask questions. You got to ask questions about some other opportunities, some other services that they might have, so that you can obviously deliver your financial goals when it comes to your self-directed individual retirement account and apartment syndication. Well, those are the nuggets I have to share today with us in the medical profession, and also to our network individuals that are trying to get into apartment syndication using our retirement account. Some of us have piled up retirement account and mostly directed to Wall Street. Apartment is a tangible investment that you can self-direct your retirement account also to. So with that, if you find this episode helpful, be sure to subscribe to Commercial Property Club podcast. Share with your friends out there, your colleagues out there looking to optimize their retirement investing. And if you have any questions, just like I always say, you want to learn more about apartment syndication, feel free to reach out to me at Commercial Property Club podcast. I'm on YouTube. And if you have any questions, you have any topic that you want me to cover, don't hesitate to reach out to me on LinkedIn, also to Facebook, YouTube. You can hit me, send me an email also to ola.i@commercialpropertyclub.net. Until another time, keep making smart investments. Those are the choices that you have. Build your financial future so that when you get into your future, you have something to rely on. All right. Until another time, it's Ola here at Commercial Property Club podcast. Thank you for joining me. Have a super fantastic day.